For me, hope all is well. Want to get into my pre-market plan for this coming week, as I do with every week. I know that I took this last week off, and just want to, as always, come back, give an analysis for my future self, puts my plan together and everything else for the coming week. And I want to switch things up just a little bit. I know that typically when I start, I always start with the indexes, the dollar, the pound, and the yen. But this one, I wanted to start a little bit differently. Maybe I'll just do it for this week, not do it next, and just kind of go back to regular scheduled programming. But I want to just try this a little bit. Just because, I do spend a lot of time focusing on the indexes in my pre-market plan in my video, but a ton more time in my pre-market analysis. So maybe I should just keep that analysis for me and then make the observations as it pertains to the pairs I'm actually going to be trading, so it can add a lot more context. So let's get started. With that, I have GBP, JPY pulled up on the screen, and as we can currently see, I mean, look at this. We've been extremely bullish. Like this last week, even the week that I took off this last week here, the previous candle close, insane amount of momentum. Obviously, ending this most recent week, we are looking like we're going to see a continuation more than likely, just because we're seeing this long wick rejection to the downside. We do have a bullish solid body. Obviously, perfect world, it would be less of an upper wick for me, but until I see otherwise, until I see long wick rejections and reversals back down to the downside, which I am expecting retracements at some point, I just don't know when. Until I see that, though, I will remain bullish, and this adds a ton of context as well when we look at the daily. As we can see, I mean, we've just been continuing to make higher highs and higher lows as I've been continuing to cover each and every week. I did remember mentioning here as well in my pre-market plan that this is a very pivotal level for us to come into, 175.45 area, very fickle trend line, and we ended up squeezing and making that push above this very big level here at 175.55. So we've been continually and just remaining basically within a new area, basically price discovery, right, between this 175 and 188 sort of area. And so it looks like, price is pretty much going in a straight line to 188 just because there are a couple different things, right? First, there's no traffic looking left, just technically speaking. We have, been basically flatting to the upside and everything else. I can kind of delete this here as well. Excuse me. And, perfect world for me, of course, I would love to see a retest of either 177.89 or 175 sort of area prior to getting in. But I don't think we're going to get that because, again, there's zero traffic looking left on the chart, not for months worth of data that we see any sort of traffic looking left. So we have a pretty clear shot to 188. But, again, I am expecting retracements in the middle of that. I just don't, I don't know where I'm going to be able to catch it here, right? I'm looking more towards intraday timeframes. But on the other side of that, just from a fundamental sort of perspective, the Bank of England did raise rates this past week. And outside of that, we are having UA to speak, as well as Governor Bailey for the Bank of England speak this week, I believe this Wednesday. But with that, let me just jump over to JPYBasket and the pound here very quick. As we can currently see, right, the yen is just continuing to fall to the downside. There's absolutely nothing going on as far as the yen is concerned. I'm not expecting any sort of upside whatsoever unless it's a retest of this previous structure we just broke down from at 7150, 7200 sort of area. And so with that, right, I am continually expecting, or I'm going to continue to expect downside on the yen. Holy shit. We could even affirm this on the weekly here. I mean, clear momentum to the downside. We, pointed out this microstructure at 7,200 a couple weeks back, thinking that we would stop up there potentially, but absolutely not. The yen is looking to make a brand new lower low, as we can currently see in this lower low and lower high sort of structure. So overall, I am still expecting further downside for the yen, and this would obviously translate to GJ longs, but with the Bank of England raising rates this last week, we did see a small dump. But to me, this is looking like, again, a break in sort of retest structure. We have a lower low, or rather a higher high and higher low structure forming here as well. We have a low, we have a high, higher low, higher high. So perfect world, we would retest this previous structure we just broke out of, this local high at 126 prior to moving forward, and we can see that early this week. We can kind of see the lower wick creation for the pounds weekly candle before making that rounded bottom and making a move to the upside, while we're continuously seeing clear yen weakness, as I just covered. And I can just run back over to that here as well. So obviously huge wick rejection to end the most recent daily candle close, and again I would just continue to expect further downside. So that is my sort of sentiment towards those two indexes. Again, I am looking for this retest of 126 sort of area prior to making a move higher, and so that does sort of draw a clear bias for me for GJ longs. And we can look at intraday time frames to kind of figure out where we'd want to be within that. We are this is the weekly sort of range we close within. Extremely bullish. I mean, we basically had a makeshift sort of bull flag before making this big move up. We could also throw this trend line on here. And again, we see these kinds of trend lines time and time again, especially when they close within ranges, right? Either we get the push, we get the higher high and higher low structure before the push and break of the range high, break, retest, and move higher, or we see this fickle trend line sort of break and see price roll over on itself. Overall, being that we are within this sort of weekly range, I'm going to want to play it as such, right? So I'm not going to necessarily long the range high until we get a break and retest of that structure, but I definitely think that this potential either ascending triangle or channel is still forming, so I am going to be patient and letting it sort of play out. Don't want to get sort of faked out in any sort of push and deviation to the upside before this sort of structure develops. Other side of that, right, if we end up breaking this sort of trend line, I'm going to wait for the local low here, this last week candle low, around 180 sort of area. If we break that, then all bets are off. I would look for breaks and retests and shorts back into 175. This is a sort of, I would say this is a respected level of structure. Not only does it have history on the weekly here, we did respect it back here as well when making this higher high and eventually breaking out of it as well. And as we always know, we typically retest structures we broke out of most recently. So only in the case that we break below this sort of channel, this sort of range that we formed last week, break, retest, and lower with momentum, that's the only sort of scenario in which I'd be wanting to get short. Otherwise, there's no reason to. We're clearly bullish. So again, two scenarios for me, or maybe even three. I don't like trading the range mid necessarily, but there is a nice little sort of microstructure here around 181, 150 sort of area that I would consider longs from. I would consider the break and retest of the range high to long from, and then of course I would consider wicks into this range low to long from. Makes a ton more sense in the 1 hour here. And I do want to highlight something here as well. I know I don't usually have the MAs present when I'm doing my pre-market plan, but they do add a small bit of context. I don't use them as a huge confluence in my trading by any means. Like, MAs don't move price, but it does help just a little bit when we're looking at just again clear trends, like especially a little bit on intraday time frames here as well. I know a lot of people use the 25 and 50, but I prefer the 100 and 200s because it gives you a better macro picture, personally speaking. And so once again, intraday time frames always make things look a bit clearer. Obviously, we have a well-developed range here, very well-respected range mid, as we can currently see. I was just highlighting this on the 4 hour between 181 sort of 50, 180, 130 sort of area. Definitely adds a bit more context for wanting to get long there. Also, again, we have the range low here, well-respected level, local level of structure. And again, any breaks below that, I'd short into 178 and levels lower than that because we do have other areas of structure that I've held as support, as we can currently see. But again, we do have this channel here, this potential ascending triangle. We can take the measured move here as well from low to high. And the measured move brings us straight into 186 sort of area. And again, that does line up with that sort of, I guess we can call it price discovery into 188 if we do get there. And so obviously this most recent 1 hour candle close is not the best, but of course, as I mentioned on the 4 hour, I am still waiting for this range and this sort of ascending channel to sort of form as far as the structure is concerned. So once again, range mid longs are valid to me. Breaks, retests of the range high, and obviously breakouts of this ascending channel are valid to me. Retests of the last week candle low and range low are valid to me. Anything below that, I would short into previous levels. Hope that makes sense. Looking at the gold, moving straight on. We saw a lot of downside for gold, honestly, but as far as I'm currently concerned, we're seeing a ton of downside on the dollar here as well. I don't know why we're seeing so much gold weakness, but technically speaking, it does make more sense just on the gold chart overall. But I do want to highlight this. I did mention this in previous pre-market plans. We are still forming lower lows and lower highs as far as the dollar is concerned. We did close below 103, although it does look like we tried to reclaim it in the most recent weekly candle close. We did not, so that's something to note here as well. Looking at looking at this thing on the daily, this does look like it's it makes perfect sense to want to see a retracement here, right? Swing low to swing high. Locally speaking, we do have the 618 here at 103 sort of 60 area, so I would look at that as a level of microstructure to want to be retested prior to making a move lower. If we kind of blow past that, obviously I would want the 786 to hold and overall the bouncer break level to hold and everything else. But all in all, what I'm looking for here on daily time frames is a lower high, right? To sort of again affirm the reversal and lower high we're seeing on higher time frames, notably the weekly. So again, I am of the sentiment that we should be seeing a retest into 103 sort of area, technically speaking. Obviously, perfect world, we just see a clear, price go down in a straight line to 101, but we know that's not going to happen. I'm looking for that lower high to be formed at the next level of sort of microstructure here. Obviously, worst case scenario, we retest 105, 104.75 sort of area again, and that is still our bigger bouncer break sort of level. And it does make a bit more sense, right, to see gold downside just because we're seeing to see these retracements on the dollar. But overall, I mean, there's still been dollar weakness, so we're just gonna have to play it by ear as far as structure is concerned. And then even when we look at the the daily and weekly charts on gold, they just do not look good whatsoever. Although we're hanging on by a thread as far as 1930 and 1920 is concerned, we've already broken down on into those levels on intraday time frame. So you got to kind of take this chart with a grain of salt and look at the monthly. Like, look at this thing, clear downside, right? We have a ton of data looking left to see where we end up in situations like this. So looking at this thing on the daily, I am expecting a small bounce here potentially, especially because we have a very well respected level of structure we just fell into between 1920 and 1905. As we can see, looking left, this could act as an area for a price to retrace before moving lower. Just again, overall looking for a potential bounce here and basically wanting to get short here, right? I did mention 1959 as a sort of big level for me to see weakness below if I am going to want to get short, and then even more so 1930, and we've broken both of those levels, so I have no reason to not look for shorts, right? Again, macro sort of picture, I would look for perfect world shorts either at 1938 sort of area in confluence 382 or a more deep retest around 1957, 1959 sort of area in confluence 618 just from a daily time frame perspective. And this does add a ton more context when we look at it on the 4-hour. As we know from previous pre-market plans, I've mentioned that 1930 is a big level, maybe 1932 and 1938 sort of area. And as we can currently see, right, we're making lower lows, lower highs. We had a fucking quadruple top here, right, even though that's not really a thing. And we had a huge break of structure below the May 23 low. This is a huge level to have broken. Look at this thing looking left. We have not broken this for a while, right? So this is a big SR level to want to see retest from and moves lower. Obviously, looking at this from a kind of wider angle and kind of a wider lens, we do have the 382 at 1932, and we already rejected from there as well. So I would want to see retest into the May 23 low and moves lower to get short. And then we have this kind of this janky 618 here around 1940, 1950 sort of area. I can even take this a little bit more locally, adds a little bit more context. We have the 618 in confluence with the 1938, 1939 sort of area. But either way, it still spells out all the same areas of interest that we're looking for here, right? Either the retest into the May 23 low as deep as 1938 here as well, or the move all the way into the sort of 1957 area to want to take shorts from. I'm not going to be getting long until we break above 1957, 1965 sort of area. There's no reason to, especially with the way the dollar is currently trying to retrace. I would expect gold weakness after touching those previous levels of structure. And look at how clear this looks on the 1 hour, right? We closed the week within a range. I can even make that a little range mid here. This is perfect, right? I can even make it, we can put it down here if we want, boom. either here or or where we were at before. But regardless, we closed the week within a range, and I'm going to want to play the range as such, right? As I mentioned, 1932 all the way up to 1938. I would say 1930, yep, right into 1938 would be acceptable to take shorts as long as we're seeing candles like this, candles like this, like wick rejections into those levels and moves lower. I would take that into 1910, 1911 area all day, every day. I would expect the break and retest of 1910. And if we do get it, right, I don't have a fucking crystal ball, but if we do get it, I would take the break and retest of 1910 as well. So that's kind of what I'm looking for. Three really big areas of interest for gold: 1932, 1938 to take shorts from, 1910 break and retest to take shorts from. If we break above 1938 area, I'm going to kind of sit on my hands until 1957 or one of these previous levels of structure. This 1948 range mid that's in confluence with the 4-hour 618, I would maybe consider, but I would want to see weakness back below 1932 or weakness at 1957 to really get short. So I hope that made sense, future me. I hope this sort of new format helps. Just to kind of to sum everything up once again, we have GJ, the pound against the yen here, closed the week as we can currently see within a range. We're currently in price discovery in the 180s. So one of two things I'm looking for as far as the 1 hour is concerned, or rather a couple of different things: a break and retest of this range high to get long, a break and retest of this last week candle mid, this range mid to get long as well. A little bit more risky, but outside of that, I would take longs from the range low as well. I do want to highlight something. If we do break this range low, break retest, I would take shorts. So I hope that makes sense. Just to sum up gold here again, currently looking pretty bearish, so I would take shorts from 1932 as deep as 1938, and I would take the break and retest below 1910. If I see anything above 1938, I'll sit on my hands until 1957 or look for a fib play. Hope that made sense. Future me, God bless you. I hope you're doing your fucking thing, bro. Living up to your utmost potential, doing your thing like I said. Love you, bro. God bless you. God bless everybody watching. Take care.